Today we're going to talk about chapter 10, which is about short-term business decisions. So I have selected this question about relevant and irrelevant information and making pricing decisions. So we have a company called Sea Blue Manufacture flotation vest in Charleston, South Carolina. Sea Blue contribution margin income statement for the month ended December 31st contains the following data. So we have sales in units, so it's total number of units, and net sales revenue, variable cost, manufacturing and selling, total variable cost, contribution margin, fixed cost, manufacturing, selling, and the total fixed cost, and operating income. All right. And suppose Overboard wishes to buy 4,600 vest from Sea Blue. So this is another. So Sea Blue, Overboard is one of our customer. Sea Blue will not wish to buy vest from Sea Blue. Sea Blue will not incur any variable selling and administrative expense on the special order. So this is a special order. The Sea Blue plant has enough unused capacity to manufacture the additional vest. Overboard has offered $15 per vest, which is below the normal sales price of $19. Okay. So Overboard is a new customer. He wants the Sea Blue to make 4,600 vest. They will not incur any variable selling and administrative expense by making these 4,600 vest on this special order, and they have an unused capacity, so capacity is not an issue. However, Overboard has offered $15 per vest, which is below the normal sales cost price of $19. So we need to make a decision. Identify each cost in the income statement as either relevant or irrelevant to Sea Blue decision. So what would be the cost that would be relevant and irrelevant in this case? So let's go back to this information. So manufacturing cost that we have $96,000 will be very, very relevant because this is directly associated for producing 4,600 additional, because this 32,000 units will cost us $96,000. So if we increase 3,200 to additional 4,600, so this number will go up. It says the variable selling and administrative expense will not be occurred. So that means this selling and administrative expense, 108,000, will not go up. So this 108,000, since it will not go up or down, so it's irrelevant in our decision making. And it says manufacturing fixed cost, which is $124,000. This is irrelevant because it's a fixed cost whether you make 32,000 units, less than 32,000 units, or more than 32,000 units. 94,000 would also be irrelevant because it does not matter whether you make 32,000 more, less, there will always be 94,000. So that's the answer for the first question, whether which costs are relevant and irrelevant. The second question asks, prepare a differential analysis to determine whether Sea Blue should accept this special sales order. So we have to create a differential order, and we want to know whether we should accept this order or not. So this is requirement number 2. And we know that there will be a sales revenue increase for 4,600 units, but keep in mind they are not paying you $19, they are going to pay you only $15. So you will receive only $15. So for 46 So 4,600 multiplied by 15. So you will have a $69,000 more revenue. Okay. Now we need to find out variable cost, how much is going to be a variable cost. So we look over here. This is a relevant cost. This is the cost for 32,000 units. So if we take $96,000 and divide by these 32,000 units, we get 32 divided by 96, it will be $3. So that means we have an increase in variable cost. So variable cost, and I would just put manufacturing over here. So that's 4,600 units multiplied by $3. So that would be multiplied by 4,600. That will be increase a cost of 13,800. All right. So we have no other cost. So the contribution margin would be 69,000 minus 13,800. It would be 55,200. So if we take this order of this 4,600 vests and sell it for $15, not for $19 that we usually do, we still would increase our contribution margin by $55,200. So I believe that we should take this order. We should take this order. Let's see what is the third option. The third one is asking, identify long-term factors CBlue should consider in deciding whether to accept the special order. Okay, so what are the long-term factors? We know that when it comes to financial, the only relevant information that we have is $96,000. So one of the things that we have to find out is that, is this order going to impact future sales? That's one thing we need to consider. Second, by doing this order, would other customer ask for $15 instead of $19? $15 instead of $19 regular price. So these are the things that we need to take into consideration long term, whether we should do this order or not. So this is the question about a special order. I hope you like this video. If you have any question about this video, please feel free to let me know either via email or just by posting comments on this email. Thank you very much for watching this video, and I hope to see you in the next video.